Hello, this is Vance, and this is Thursday, March the 30th, 2017. And these are the CL trades for today using the slow hand method for price action. Today was just a real continuation of yesterday. I mean, we had the market really from yesterday's from open really kind of moved up. I mean, we had the DOE report. And right from the open, prices just moved up, kept moving higher, and in the overnight we really just had a basic hesitation. Price moved up a little bit higher, and then this is 9 o'clock, the 9 o'clock open. And so I was looking really along the lines of this looks like a real move to me. And if you look at the RTH, there's a slight gap up. I figured that would be a continuation, that we would continue to move up for a couple of reasons. I think the biggest reason you have to look at is that all markets typically move together. And particularly when you're talking about the U.S., you have to look at the S&P. And over the last couple of days, it's been regaining a lot of the ground that it gave up last week. And, it's almost really back at 2,400, where it was just a couple weeks ago. So the unwinding that took place over the last couple of weeks is really being rolled back in. Now, I suspect that that's kind of the biggest reason that the CL is moving up there as well, because of the fact that it's moving in lockstep with the ES. And so fundamentally, it just has to move in. It's just moving in concert. So I would think that would be the reason. And of course, you can see that after the fact. I mean, if you take a look at how the ES moved today, or the S&P moved today, and the Dow, everything's moving together. And even the Canadian market, we're up. We're resource based, and so when the resources is up, the Canadian market's up. That's the way it works. Anyway, the first trade I really saw was here just after 9 o'clock. This is the 9 o'clock open is right in here, and so I expected that we were going to continue to move up. So this was my first trade. I put a trade on here. Problem is that I got stopped out on this, or came back and took me out. It turned over. The market turned over, and I guess it just wasn't ready to go. So it started to move up, and then turned over. It gave me 13 ticks, and came back and took me out at my entry price. I entered at 91. I think it was 49.91. Now, I also looked at 91 at 50 at $50 as the the line in the sand, and that's the price that everybody's really looking at. So it only stands to reason there's going to be more hesitation right at that $50 mark. So price did turn over here. Didn't look at getting short here. I was still looking long. It dipped a little bit, and as soon as it kind of firmed up, and as soon as I saw this hesitation, I got back in. And it took a while to work out. So if you look at getting in here, even a little bit higher, as long as your stop is below these areas right here, it was okay. It took a while to work out. It moved a little bit sideways, but when it broke, it started to move up. So your first contract, if you're looking at making this high again, came out, and then from then on, it kind of just really moved up from there. Here's a second entry short right here. First entry, second entry short. Now, do you take that trade? It's stopping up. There's some overlap. The momentum's up. We've already had this first leg up, and I think that this is more of a long than a short. The reason is that we've already had this. This has been pretty strong move up through here. It's a pullback at this level, and it's really at the $50 mark as well. If price breaks and holds above $50, I think we're going to go higher. And so this is a nice setup. It's a second entry short, second entry long. For first entry, pulls back. Second entry, a strong bar to get in. It takes a little hesitation, moves up, and then we have another two pullbacks, another second entry long right here. First pullback, second pullback. So if you're not in on this one, you get in on that one. Again, this took a little while to work out. I mean, limiting in would be the best bit. Get you in there quickly, most quickly. Of course, that's always the case. But even still, once if your contract gets off here, and then it just was moved up for the rest of the day. It took a while. Then, really by about noon, when prices it hit this hesitation. Now by that time, you think that it wasn't a lot of movement. I mean, we went from 40. Let's say we're at the open, that's 49.80. Pokes up to $50.50, so we're talking 70 cents at that level. Does pull back, kind of rotates back down. I wasn't here for this. I mean, I had an appointment this morning, so I wasn't really watching this, and I was really done anyway. I mean, the fact of the matter is that price gets up to this level. It does pull back. I mean, do you take a short in these areas with the anticipation coming and rolling down? No, I would have still been long here, and so but it does kind of channels up. To look at taking anything short. There's really nothing here because it's really side by side. I mean, you can go short, but now you have to realize the range isn't very wide. So really, the target would be down here someplace. So that would have been okay, but as long as you shorted up here someplace. But with all this overlap like this, you have to limit in and kind of hold for an extended period of time because there isn't really any clear signal. And the fact of the matter is, when prices moved up like this, you can look for another leg up. And so this is really, there's really no real indication for here. You don't get a break till here. This channel, it breaks here and then pulls back, and it's not really clean. And this, by this time, is 1:30 right here. So it's kind of late in the day. You've only got another hour till the open. And of course, if you would have taken this trade, it would have worked out. But then it kind of turns over. So you got a 15 tick range right here. Most of the movement took place early. And I mean, that's really the key area. I haven't talked about that in a while, but one of the things that you have to really consider is that when you're trading a market, I mean, most of your trading, the 80% of your trading is going to take place in the morning sessions from the open till noon. Once that noon hour hits, things start slowing down. You can get some movement in the last half hour or maybe the last hour before the close, but that's not usually the case. The best time to trade is really going to be first thing in the morning. So the open, the 9 o'clock open, Eastern Standard Time, is the best time to trade. You got to be around at the open because a lot of that movement will take place in the first hour, maybe 2 hours of trading. And if you've only got 2 hours or you're living in a time zone, schedule your break or schedule your timing for trading right in that period of time. That's all you really need. And if you take a look at it, this is 10 o'clock right here. I mean, by the time if you get your 30 ticks out, 30 ticks, this is 11 o'clock. So this move here, 30 tick move is all there is. And if you look at the regular trading hours, if you cut it out, it's right here. It's not a lot of, you don't have to spend a lot of time. There's no reason to spend 8 hours staring at a chart. I mean, it's 6 hours. An hour and a half, if you're well prepared, is plenty of time, 90 minutes. So you look before, look after, and set up, and then if it doesn't hit that day, come back tomorrow. I mean, there's always another day. I mean, that's kind of the thing. So to sit here and really kind of mull over later in the day trading, I mean, I'm not saying that you can't. I mean, certainly I do if I don't have anything else on, but 90% of the time I'm finished by noon. It's just not it's not in the cards to hang around and after that time when prices are really slowing down. So today was a couple of things. I mean, more of a context thing, context trading. From what I mean by it, based on what we had yesterday, because if you look back to yesterday, this was, as you recall, I talked about yesterday, prices moved up, and after the DOE report, it kind of ground its way up here. It was more of a continuation to go higher. And if we look back even to Tuesday, let's say here's Monday where it hit the low, Tuesday, Wednesday, Thursday, you can see the prices all the way up here. And this really corresponds to the ES. Like last week we had, it was kind of really more sideways. We had a couple of slashes down, but once price bottomed out on Monday, you can see that this is the trend has been basically up. I don't know if that's going to happen tomorrow. This $50 mark is really a psychological barrier as far as oil is concerned. So, I mean, we might have some hesitation. We might have sideways tomorrow. Tomorrow's Friday, last day of the week. That's something to consider as well. But overall, if you caught these moves, if you look at it, these are really right at, right around 9 o'clock. 9 o'clock, really, when the prices moved up. This is around 9 o'clock. This is when it first opened. This is the DOE report. But 9 o'clock, you can see where prices. And if you get rid of the first, the overnight here, you're looking at just the movements up. There really wasn't any down movements. I mean, the down stuff is probably there was more opportunity last week, and even then it wasn't. You can see that this is the overnight, and then when prices kind of opened up, and when it really went sideways. So. Overnight, and this was at 9 o'clock. This was a couple days ago, as you recall, on Monday. The price is 9 o'clock, bounced down, but then turned around and kind of moved up, found the base, and then moved up from there. So when you take a step back and you look at it from a broad angle, you can see that the movement. Look at it from even if you put a thing, it's really been, here's your trend channel over the 800 tick chart for the last 4 days. You can't say that, like, how do you You look at this from a longer standpoint, is really when do you see the break? I mean, how do you actually go short on something like this? It's really tough to do. That's why I'm long. I mean, that was why I was looking for, there's no follow through on the pullbacks. So, and the opposite is true with the gains. And this corresponds to how the U.S. market's been running. So you have to look at it. It's been running. It's been on a tear over the last couple of days as well. So, I mean, they kind of run in concert. Why buck the trend? There's always be prepared, and that's really what we're trying to do here on a day by day basis. Anyways, that's it for now. I'm going to do a separate video with reference to the slow hand method course. I'll do that separately. I'm going to publish that tomorrow, and I'm going to get things rolling for that. And hopefully by early part of next week, my web page is going to be up and public at that point in time, and then we can start doing this with people that are really interested in looking over the slow hand method. So we're going to start that. I'm going to start that next week. And excuse me, still feeling the effects of this cold. Apologize. That's it for now. Thanks for watching. If you have any questions, please let me know. This is Vance. Bye for now.